Morning everyone, welcome to Ainsley News. Wow, what a volatile time we're having at the moment. Record commodities surge on full fear. Friday night was another volatile one on global markets. And if you've been paying attention this morning, it continues with the bearish news of the Russian attack on the power plant and the conflicting news of the US NFP employment figures, showing a much stronger than expected surge in new jobs of 678,000 versus 423 expected. But also unexpectedly weak wage growth of just 0.5% amid the rampant inflation enforcing Main Street America is going backwards. Gold extended its gains by 1.2% and silver up another 1.7%, while shares were all in the red and the Nasdaq leading the falls, down another 1.7%. CNN's Fear and Greed Index printed on 18, the worst since COVID March-April rout in 2020. Unsurprisingly, gold and silver weren't the only go-tos amid the panic, with bonds surging and the yield curve plummeting towards zero. Below and shown in charts today, we show the 2-year and 10-year, and you can see it's again at those COVID crash levels. Inversion, as happened in 2019, is an almost faultless historic precursor to a recession soon after. Again, the US was heading toward a recession regardless of COVID. COVID simply triggered what was already preordained. But as we talked about last week, a bond is still a debt instrument being bought as a safe haven during a debt crisis. It should come as no surprise then that commodities, the basket of hard assets left behind in the free money growth trade, into tech, etc., are screaming back into vogue as the penny drops with investors. You can see in our charts today, the Bloomberg spot commodity index saw its biggest jump since stagflation crisis of 1974. Stunning rise there. The rotation from growth into values still has some time to go. This from Crescat's latest research paper. If we invert Professor Robert Shiller's cyclically adjusted price to earnings, or the CAPE, for the S&P 500 and subtract by inflation rates, today we've seen the lowest yields in 75 years. The last two times we reached such depressed levels were in 1917 and 1947. Most of these declines were driven by double-digit inflation rates. This time it's driven by both excessive valuations and historically high inflation. US equity markets are extremely expensive today. So not only do we have deeply negative real yields across the bond spectrum, but also on shares. When the criticism of gold by some financial advisors is its lack of yield, you can see why such an environment as this, where the capital value prospects are so strong against no relative real loss of yield per se, it's perfect for gold and silver. We're currently at the convergence of both the prospect of a deteriorating global war and deteriorating economy. As Crescat has said themselves, you cannot own enough gold and silver. And that's news for today. Jump over to ainsleyBullion.com.au, grab some of that physical stuff, gold, silver and platinum. We are busy, but we can handle your inquiry today. Just give us an email, call, or you can purchase directly from our website with a simple credit card deposit. AinsleyWealth.com.au if you're after cryptocurrency. We also sell gold through that platform as well. Another place where you can go and secure some Ainsley gold, silver, and cryptocurrency offerings as well. And goldsilverstandard.com. This could be a different way for you to secure some gold or silver that's a little bit more portable. Built and backed by Ainsley, of course, but a hell of a lot more liquid for those that prefer cryptocurrency to the solid stuff. That's built and backed by Ainsley and pegged to real gold and silver. Enjoy your Monday, everyone, and enjoy the ride. We'll catch you tomorrow for more news.